Hey everyone, Jeremy Chambers here, certified financial planner and founder of the Hourly Advisor. Today we're diving into a retirement savings tool that's often overlooked but packed with benefits, the Health Savings Account, or HSA. Now you might be thinking, isn't an HSA just for covering medical expenses? Well, yes, but it can be so much more than that. Stick around because we're going to explore how HSAs can also be a powerful retirement savings vehicle. And as always, I'll show you a case study comparing paying medical expenses with after-tax dollars now versus waiting to pay them tax-free with HSA dollars in retirement. Let's get into it. First, let's break down what an HSA is and why it's such a hidden gem for retirement planning. If you're enrolled in a high-deductible health plan, you may be eligible for an HSA. Now here's where it gets really good. HSAs offer what I like to call the triple tax advantage. Number 1, contributions are tax-free. That's right. If you're making contributions through payroll deductions, they aren't even subject to Social Security or Medicare taxes. 2, tax-free growth. Once you reach a certain balance, many HSA providers allow you to invest in mutual funds or other investment vehicles, just like your 401k, and your investments in the HSA grow tax-deferred. And 3, tax-free withdrawals. As long as you're using the funds for qualified medical expenses, your withdrawals are completely tax-free, similar to a Roth IRA. That's a win-win-win. Now, when we think about retirement, we often focus on fun things like traveling, golfing, or spending time with grandkids. But one of the largest expenses for retirees is healthcare. The average retired couple might need over $300,000 to cover healthcare costs during retirement. That's a huge number, and healthcare inflation keeps outpacing general inflation. An HSA can be a powerful way to save, specifically for these healthcare costs. Even better, if you don't use the funds right away, they stay in the account, growing tax-free. So your HSA can essentially become a second retirement account. If you've already maxed out your 401k or IRA contributions, your HSA can provide even more tax-advantaged savings. The beauty of it is, unlike a flexible spending account, or FSA, your HSA funds don't expire at the end of the year. The money stays in your account and can continue to grow. If you change jobs or switch health plans, you still own your HSA. That means your account can grow for decades, providing a dedicated fund for healthcare expenses during retirement. However, keep in mind that you can only contribute to your HSA when you're enrolled in a high-deductible health plan. For the 2024 tax year, you can contribute up to $4,150 as an individual and $8,300 if you're covering a family. Plus, if you're 55 or older, you can stash away an extra $1,000 in what's called a catch-up contribution. And here's the kicker. Some employers even contribute to their employees' HSA accounts. Here's a cool trick not many people know about. You don't have to use your HSA funds for medical expenses right away. Let's say you pay for some big health expenses out of pocket using after-tax dollars. You can save those receipts and years later reimburse yourself with tax-free HSA withdrawals, even decades later. It's like getting a bonus when you least expect it. Imagine this. You pay for a $2,000 surgery today using after-tax dollars. You tuck that receipt away and let your HSA funds grow tax-free for 20 years. Later, when you're ready to access your HSA in retirement, you can reimburse yourself the full $2,000 tax-free whenever you choose. It's like giving your future self a financial bonus. Just remember to keep those receipts somewhere safe. Also, once you hit 65, you can use HSA funds for non-medical expenses without facing the 20% penalty. Now, you'll still have to pay taxes on those withdrawals if the expense is non-medical, but like I said, if you're paying for medical expenses from years past, those withdrawals are tax-free. And unlike your 401k or traditional IRA, HSAs don't have required minimum distributions, so your money can sit and grow as long as you want. So let's hop into an example. For my case study today, we're looking at Harry HSA and Harriet HSA. They're 31, maxing out their 401ks, doing backdoor Roth conversions each year, and maxing out their HSAs. They spend around $9,000 per month on basic living expenses, $2,500 per month in rent, and have about $2,000 a year in medical expenses on top of their healthcare premiums. They plan to retire at 60, and since Medicare starts at 65, they're concerned about healthcare costs when they begin retirement. With the high rate of healthcare inflation, they're estimated to have around $50,000 per year in healthcare costs in retirement, including their premiums. So here's their question. Since they have the HSA, should they use it now for their ongoing medical expenses or wait? Should they continue to let the HSA grow tax deferred and make tax-free withdrawals in retirement? So here's what the math says. If they use their HSA now and pay for their annual healthcare expenses with pre-tax dollars, they have a 78% probability of success and $31.4 million in median ending wealth at age 95. If they just pay for their healthcare expenses with after-tax dollars now and begin to use the HSA to pay healthcare expenses in retirement, they have a 78% probability of success and $31.7 million in median ending wealth. So by deferring the medical expenses until retirement, they can have an extra $300K to spend. It might not sound like much, but think about what you could do with an extra $300,000 just by being a little more disciplined. Your HSA is just one piece of your overall financial puzzle. While it offers tremendous tax advantages and can help you prepare for healthcare costs in retirement, it's important to see how it fits into your broader financial plan. How much should you contribute? When should you start using the funds? These are questions I help my clients with every day. If you want to learn how an HSA fits into your retirement plan, book a free consultation with me at thehourlyadvisor.com. Let's work together to secure your financial freedom.